Hello, crypto fans, and we got some big news for you. We're going to talk about the Coinbase case again and why it has global implications, not only US implications, and can have serious effects on the price of crypto going forward, depending on how it comes out. And this happens right after the DOJ and Binance had a massive settlement for $4.3 billion. Now, this starts today with the Philippines SEC actually suing Binance for $90,000 possibly of damages. That's small fry, but they're looking at possibly 21 years in jail for running an unregistered securities exchange. Now, they haven't proven that they're unregistered securities, but the reason the Coinbase case is important globally is because other smaller countries might follow suit with the United States, and they're just looking at the US as an example. Now, the bigger jurisdictions like Japan, like Europe, will probably not follow in the United States' footsteps. They already have their own regulations. They've already declared that a lot of cryptos are indeed not securities, and they're under different rules. But smaller countries, especially US allied ones or ones that are friendly with the United States, definitely will follow in the US footsteps. And that's why Philippines is kind of like looking at Binance right now and possibly looking at criminal charges against Binance right after the US DOJ and while the SEC in the United States is suing Bitcoin. Now, the SEC in the Philippines will probably take a page out of the SEC in the United States playbook. That means that the Binance case against the SEC in the United States will determine a lot of what the Binance case in the Philippines will actually look like. In fact, if the SEC loses in the United States, the Philippines Binance case may actually just be dropped. Or, $90,000 in damages, Binance can easily pay that. But the thing is, the Coinbase case is important because Coinbase, as all of you know, has filed for dismissal, and Binance shortly after filed for dismissal too on the same grounds. And Kraken, I believe, will do the same thing. But the decision that comes first, whether the case gets dismissed or not, will probably be the deciding factor in all these filings. And even if the case is not dismissed, the SEC still has to win their case against Coinbase to actually have an effect against Binance and Kraken. But if the SEC does win their case against Coinbase and secondary markets are considered securities, then obviously Binance and Kraken are going to lose its case too in the United States. And if they lose their case in the United States, they can actually lose their case in the Philippines and all over. So these multinational exchanges, if Coinbase loses their case in the United States, can see a lot of different smaller jurisdictions come up and hit them with the same thing, which would actually might be more devastating than what happened to Binance in the United States. And that also means US exchanges may have trouble expanding overseas as well, because they're going to have same registrations for every single jurisdiction. On the other hand, if the SEC loses against Coinbase, that means cryptos are not a security. That means the rest of these small countries will follow suit in that cryptos are not a security. And I think regulations might be end up more being like Europe or Japan or other countries that are more friendly towards cryptocurrency. So the battle in the United States might be a signal for battles all over the world, and that's why it definitely needs to be watched, even by people not in the United States, because this could affect global crypto prices in a really big way. Because, if one of these big exchanges has to close down like Binance, then obviously it'll affect coin prices in a big way. And it's not only Binance is closing down, it means like all these other multinational exchanges will have trouble, basically servicing people in those countries. So it's not only about Binance, it's about a lot of these countries having more options in crypto, and it's about crypto liquidity. The more of these big exchanges that shut down, the less liquidity crypto will have, and with less liquidity, crypto prices will go down, and we'll find it very, very hard to maintain a high price. So the thing is, the SEC case against Coinbase, which honestly is not going very well with the SEC case for the SEC right now, is going to have a lot of crypto implications worldwide. And since it's more than just the United States, it might have a way, way bigger effect on Bitcoin price, whether the case gets denied or accepted or not. Now, the cascading price effect won't happen all at once because it will probably take a few weeks for the other countries to kind of catch up to the United States and what they're actually doing. If SEC loses the case, we're good. I don't think the other countries will do anything. But if they actually win the case, then you'll see kind of a cascading effect over the next couple of months. The decision on whether they win or lose the case is probably like a year or two out if they don't get the case dismissed. If they get the case dismissed, then this is all over. And this is why we need to lobby hard for the case to get dismissed, or at least for the SEC to lose the decision, so these things are not securities in the United States. Piggybacking on that, Binance will actually cease support of BUSD on December 15th. They signaled this several months back. They're converting into 2 other stablecoins. Partially, this is probably because of the trouble in the United States, but there's probably other reasons that Binance is actually doing this as well. So if you're in BUSD, you definitely need to get out of BUSD by the 15th. There is an interesting fight between BlackRock, Grayscale versus the SEC on the ETFs. Now, the lowdown is the SEC wants one kind of spot ETF, whereas BlackRock and Grayscale wants another kind of spot ETF. So the thing is, like, the SEC wants ETFs like cash ETFs, which means it's weird because they say cash based, but what they really mean is like cash ETFs, spot ETFs can actually be backed by futures contracts, which for some reason the SEC favors over holding actual Bitcoin. Now, BlackRock obviously wants these things called in-kind spot ETFs, which means they would have to hold Bitcoin to actually support their Bitcoin ETF, which is obviously what we all support. Because like if BlackRock and Fidelity are going to hold Bitcoin for the ETF, then the price of Bitcoin will go up because Bitcoin will be more rare. Now, my guess is that like the US government wants to promote the US dollar, obviously, so they do not want any of these big companies holding Bitcoins because that might actually challenge the US dollar. But these big companies are very, very interested in holding Bitcoin because that makes the product more attractive to investors. Just the thought of like, you know, there's actual Bitcoin backing my Bitcoin investment, people are much more likely to invest. So BlackRock has actually made some adjustments to their ETF in hopes that the SEC would actually accept it. Now, I'm not really sure if the SEC will. So they submitted revisions to its spot Bitcoin ETF application in an attempt to allay the regulators' concerns over market manipulation. This is the market manipulation stuff is complete and utter BS, obviously, because futures markets and futures contracts can be manipulated a lot easier than spot. So BlackRock did actually bring that up as well. But the proposal modifies the current in-kind redemption model that would have the offshore market maker entity prepay cash. So they'll prepay cash to the registered broker-dealer entity prior to the delivery of ETF shares during the redemption process. So it's all about the redemption process. I think they should just let like BlackRock hold Bitcoins in cold storage, and that would be the redemption process. So BlackRock has argued that retaining an in-kind structure, even with alterations, provides benefits over shifting to a cash redemption method, including lower transaction costs, obviously, simpler operations, and resistance against manipulation schemes. If the SEC was really interested in protecting people, they wouldn't suggest futures contracts because futures are a very, very easily manipulable asset. There are obviously other people pulling strings behind the things. The asset manager believes addressing the balance sheet and broker-dealer registration dependencies directly through adjusted timing and custody transfers allows the Bitcoin ETF application to clear regulatory procedures while optimizing shareholder incentives. So everyone's racing for approval. All these guys are actually filing amendments, changing their in-kind. I think every one of them wants like an in-kind ETF, and the SEC is the only one holding back and wanting a cash ETF, probably for their own purposes and to promote the US dollar, because they know that once they let the genie out of the bottle, they can't actually put it back in the bottle, and they don't want these massive investment companies actually holding Bitcoin. Because, you know, then it will make it much harder for them to actually attack Bitcoin and crypto. Once a lot of funds and a lot of money from institutional investors is in crypto, there's going to be large incentive and large, lobbying money coming in, and there's going to be more and more congressmen that are actually pro-crypto than anti-crypto. And this all has an effect of essentially like securing crypto against interests trying to take crypto down. So this is why they want to get rid of the in-kind stuff and replace it with the cash stuff. So then the organizations don't actually have to hold the actual crypto to back up their ETF shares, which I think is honestly total BS. You should, to make an ETF, it should be in kind, and you should actually have to hold the Bitcoin in a treasury so people can redeem out whenever they want. IOTA actually jumped 43%, and that's because it registered in Abu Dhabi. IOTA has been dormant for several years, so it's very, very nice to see a big price jump for IOTA. It will be the first foundation to be registered under the Immigrants Regulatory Framework for Blockchain Foundations. This is not the coin itself, it's the foundation. And it having some jurisdiction in the UAE obviously has energized IOTA investors. I think it'll probably go back down some in a while, but it's a very nice pump for IOTA. And I hope IOTA resurrects from the dead and the ecosystem actually takes a leap forward. It is a DAG type ecosystem. So the new organization will be funded by $100 million worth of IOTA tokens locked up for 4 years. So they do actually have some funding. Very, very good news. You can see the Middle East and the UAE is becoming a big hub for cryptos, and I can see a lot of crypto companies and businesses moving there. And I do think the US, after seeing some of this stuff in the coming years, will get nervous and relax some of their regulations. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.